Well, folks, the flapjacks continue to be flipped straight onto the floor. It seems like everything that could be working against the market short term is working against the market. We have a 10-year treasury that continues to be stubbornly high. Unbelievable. We're looking at a US dollar that is falling off a cliff right now. Folks are saying, we don't want any piece of the dollar right now. We'd rather own, you know what? Gold. Have you seen gold? Gold hits a new all-time high basically every day. It's been free money for the last couple months now at this point in time, and it continues to be free money. It seems like every single day you wake up, gold is higher and higher and higher. Eventually that trend's going to break, probably once everybody in retail realizes this arbitrage in gold right now, and everybody piles in. That will be the time that gold starts going down. But if you look at gold, it basically hits a new 52-week high, a new all-time high, almost every single day. It's unbelievable. People do not want to be in the dollar right now. Now, 5 years from now, it may be a totally different situation, but right now, people have lost faith in the U.S. They don't have a lot of faith in the U.S. right now, and they're dumping the dollar continuously, right? Even Bitcoin is performing very well given the market conditions we're in right now. Now, do keep in mind, Bitcoin was well over 100,000 a few months ago, but given the market conditions, how risk-off this market's been, Bitcoin's actually holding very, very well, which goes to show you that people would rather hold Bitcoin than the dollar right now. And that's a lot of folks in international markets right now, including, I think, this is just a hunch, the Chinese are saying, I'd rather be in gold or Bitcoin, screw the dollar right now. That's the situation we have going on, right? So all that's working against the market short term. And to add insult to injury, now we have Trump taking things to a whole new level in regards to the fight against Jerome Powell. He called Powell a major loser today, and then warned the U.S. economy could slow down unless interest rates fall immediately, right? Now, I told you guys months ago, there's going to be a big, big fight between Jerome Powell and Trump, and it's certainly right in front of us. I mean, this is a huge escalation in regards to this fight, calling him a major loser. That's downright disrespectful, right? So in this video here today, 3 core subjects we're getting into. 1, why the next 13 days is insane. I mean, absolutely ridiculous, and what to do the next 13 days with your money. Number 2, Tesla's down over 50% the past 5 months. Where's the bottom at for Tesla stock? We're going to talk about that subject today. I thought it was worth addressing. 3rd subject here. There was a gentleman, Short Hills Capital, went on CNBC here today while I was prepping my video. He started talking about it took 6 years for the stock market to come back. If we're talking about the tech bubble, till all the way out to 2006, right? Could that be us? I thought we'd speak about that here today, and I'd give my opinions on this. Could this be us, where we're in a situation where it takes us 6 years to get back to the all-time highs that we reached at the end of 2024, beginning of 2025, right? And, you know, should we even be buying right now? So we'll get into all that in this video. By the way, I appreciate y'all joining me as always. Hope you appreciate me taking the time out of my day to do this video for you guys. I've been looking really forward to doing this one. All I need from you guys, one thing only, smash that like button on this video. And if you want to be here subscribed, you can certainly subscribe to the channel. I'm always here to cover all this stuff and my opinions on it all, whether we're in a bear market, bull market, or kangaroo market, okay? And I appreciate y'all for joining me. Additionally, if you're wondering where's the Ferrari at, needing money to buy the dip, man. Needing money, but no, I'm just kidding. It's in the shop, man. I swear that thing's in the shop a decent amount. So what's going on now is every time I would basically drive it, and keep in mind that Ferrari has I don't even think it has 3,000 miles on it, okay? Not even 3,000 miles. So the computers will just shut off while I'm driving. The music will shut off just randomly. It just all shuts down as far as that goes. So it's in the shop. Who knows how long it's going to take for them to figure out that. It could take them several more days. It could take them a week. Could take them a month. You never know in regards to Ferrari. While at Tesla, I had an issue with my Tesla. Guess what? It came to my house and they fixed it last week. Boom. That's Tesla customer service, man. That's a 101 right there. You don't even have to take it anywhere. And the guy fixed the issue in 5 minutes, legit 5, maybe 10 minutes max. Incredible. I got a free something for you guys here today. It's a free checklist on all the things I look for when I go to buy stock. So if you want that free checklist, we can email it over or text it over. It's up to you. I'll put that as a pinned comment down there. It's my checklist as far as, basically the more yeses you get in this regards to this checklist, the better that stock is essentially. So I hope you guys really enjoy that. Once again, it's free. That will be pinned comment down there, okay? Alrighty guys, let's get into this busy action-packed video. Why the next 13 days is insane and what to do the next 13 days. Well, I hope you're ready. This next 13 trading days is going to be insane, okay? First off, we have, everybody knows with the Mag 7, right? NVIDIA, Microsoft, Amazon, Meta, Apple, Google, McDougal, Tesla, right? Big, huge companies that really drive the market, right? 6 of those 7 stocks are going to be reporting earnings in the next 13 trading days. In the next 13 trading days, 6 of the 7, okay? That's going to be Microsoft, Amazon, Meta, Apple, Google, McDougal, and Tesla all reporting earnings. So if we're looking at the weighting of the S&P 500, Apple and Microsoft combined are around 13% of the weighting. If you look at Amazon and Meta combined, that's about 6% of the weighting. And if you look at Google, Class A and Class C shares, along with Tesla, that's about 5% weighting. So basically, you have around a quarter, around roughly 25%ish of the S&P 500 weighting is we're going to be reporting in this next 13 trading days. So that's going to move the market huge, right? Absolutely huge. And if you look at the NASDAQ weighting, the Q's weighting, it's even a little more substantial than that, okay? And so now everybody's looking, because we're in a fear market right now, clearly. The market's been, in extreme fear now on and off for basically 2 months. And so it's natural to look at this and be very, very looking from a fearful perspective of like, oh crap, man, Apple and Microsoft and Meta and Amazon are about to report earnings, and Google and Tesla. Oh my gosh, I'm so scared. This is going to be bad for the stock market. We're going to tank. Oh my gosh, I'm so scared, right? But in reality, they could be Spider-Man and Superman. They could save us in regards to this whole situation, as they've done countless times over the past 10 to 15 years. I mean, I've been in the market now 16 years, and I can tell you the amount of times that we were going through a shaky market, drama, pullback, correction, major correction, crash in the market, and then big tech came out with earnings, and the earnings were better than feared, and people got more bullish. I mean, the amount of times they came and they saved us, like Spider-Man and Superman, it's been a lot. And so this could be a situation where the market's all tied up in tariffs and Trump and Powell and all this stuff right now. But in reality, we got the gauntlet coming of big tech earnings. If these companies come out with pretty good numbers and guidance that is respectable, they could end up being our Superman and our Spider-Man and completely saving the market, as they've done countless times in the past 10, 15 years. So don't just look at it from a fear perspective. Now, additionally, this is one of the most attractive times we've seen outside of 2022 for these companies' valuations. If you look at Meta's forward P, it's well under 20 now at this point in time. For a company like Meta that's, a double-digit top-line, bottom-line grower, to be trading forward P under 20, actually very, very attractively priced. Meta's very undervalued right now. Google McDougal, forward P is 16, very undervalued given Google's growth rates, right? Amazon's a 25 forward P. When have you ever seen Amazon at a 25 forward P? Seriously, when? It doesn't happen. Like, Amazon's forward P is usually 50, 70, 100, 200. To be trading at a forward P of 25 with 3 major growth businesses, an e-commerce business that's just going to keep getting better, a bigger AWS that's just going to keep getting bigger, and the advertising business that's just going to keep getting bigger, at a forward P of 25, extremely attractively valued right now. Like, insanely attractively valued. And so I'm looking at those sorts of stocks and I'm like, all 3 of these stocks are a buy before earnings. A buy before earnings. Now, if they go down anymore, guess what's going to make them? Even a bigger buy. But all those stocks, there's no way you can make an argument on Meta, Google, or Amazon, 3 of the biggest stocks in the stock market, and say they're overvalued. You cannot make that argument right now. It's even hard to make an argument that they're fairly valued right now. The only argument you can make is that either they're undervalued or extremely undervalued. And it's like, which one is it? Is it extreme undervalued or is it just undervalued? Now, when it comes to the other 3 big guys, well, Tesla always trades at an insane valuation. So I thought I'd plug in AMD. AMD is another big tech that's going to be reporting earnings in the next 13 trading days here, right? So Apple, forward P of 24, around 24, 25. That's pretty fair for Apple, given the stability of their business model. Somebody's iPhone breaks, they go buy another iPhone. Obviously the recurring revenue streams that they have, the 30% Apple tax, we call it like a government tax, right? Microsoft's trading at a 25 forward P. Their business model just recurs, like recessions, blah, blah, blah. Microsoft's going to put up their numbers regardless. And so 25 forward P, very fair for Microsoft. I can't call Apple and Microsoft undervalued, but I can definitely say they're fair value. They're not overvalued anymore at this point in time. If we go back a few months ago, when those stocks were hitting all-time highs, you could make an argument that they were starting to get a little overvalued. Here, now after this drop, they're fair value. That does not mean they can't go into a Meta or Google or Amazon territory where they actually become undervalued. So do keep that in mind. Now, AMD, 18 forward P with all the growth that AMD is going to have over the next few years. Come on, man. Come on. What a steal deal AMD is right here, right? Now, that leads us into sentiment. Here we are, folks. 8 straight disaster weeks for AI investor sentiment. This is the sentiment survey they've been doing all the way since the 1980s. And how investors are feeling the next 6 months. Are they bullish on the market the next 6 months? Are they neutral on the market the next 6 months? Or are they bearish, right? We've had 8 straight weeks, basically 2 months of disastrous sentiment. Complete dumpster fire. We've never seen it this bad ever. Ever. In terms of an 8-week span. I've gone through the entire sentiment survey. All the way through the 2022 crash, the 2020 crash in Rona, the 2008 crash, the tech bubble crash, go back to the 90s, go back to the 80s. You'll never see an 8-week period this bearish. This is unprecedented. And here we are at this moment where over this next 13 days, we could actually start to flip a little more bullish. Now, this is not going to magically change overnight where all of a sudden everybody's and their grandma is going to be bullish. It takes time. But there's already the early telltale signs that people are starting to get a little less bearish, right? If you look here, peak bearishness actually hit this week, April 2nd, right? We were at almost 62% bearish. Then we went down about 59%, then just under 57%. I wouldn't be surprised if this week coming up here is probably still in the 50 range, but probably a lower 50 number. And so we're already getting the early signs here of the sentiment starting to flip, but we're very early days here. Now, once we get under 50% bearish, you'll know like the flip is real then at that point in time, right? Because then we'll start heading to the 40s and then we'll start, kind of getting more into a normalish range, but it takes a while. It's not like all of a sudden everybody just goes from bearish to bullish overnight. Doesn't work that way. It's a process. It's a process that essentially has to work out. Now, if I show you back to 2022, the latest crash we had, right, where the NASDAQ fell about 37% peak to trough in that crash, right, from where it peaked in 2021 to where it troughed at in the fall of 2022, right? If you look, the sentiment was extremely bearish right around the time the market bottomed, essentially, right? And so we might have already hit a bottom in the market at this point in time, right, on the S&P and the NASDAQ. And, right now it's just kind of like playing games, right? It's going to kind of get close to retesting the bottoms and things like that, but at the end of the day, it just ends up going up. So that could very well end up being what happens here, because this is right around the time that we bottomed in the market. Now, additionally, if you look here, I wanted to show you this, because after the market even bottomed, right? The market bottoms right around here. Even after that, there were still a lot of people bearish. Like, look at a lot of these weeks were still 40% plus bearish well after the market had already bottomed. Look at this, end of December 2022, 47.6% were bearish on the stock market the next 6 months. Guess what? Stock market went up in a straight line the next 6 months, okay? Look at even here, March of 2023, we're way off of the bottom now at this point in time. Look at some of these numbers, 48% still bearish on the market the next 6 months, 48% bearish. Look at even out here in May, now we're like 9 months removed, 8-9 months removed from the bottom, right? And we're still hitting some months or some weeks that 40% plus were bearish on the market, 7 months later or so. Incredible. But it's not just those folks, it's Wall Street. What I'm showing you is a screenshot that I took back in December of 2023. And even after, this is over a year after we had already hit the bottom in 2022. Look at how bearish Wall Street still was at that particular time. And these are the biggest Wall Street firms out there. We're looking at Goldman Sachs, Wells Fargo, Barclays, Morgan Stanley, JP Morgan. This is Wall Street. This is the big dogs. This isn't some like random funds or something like that. No. These are the 2024 S&P 500 year-end price targets for the big dogs. This is what they were predicting. Goldman Sachs was at 4,700 at that particular time. Wells Fargo was at 4,625. Barclays and Morgan Stanley were at 4,500. And JP Morgan was at 4,200. 4,200. That's where they thought the market was going to end 2024. We ended the market in 2024 over 5,800. They were not just wrong, they were wrong by a mile and a half. And so this goes to show you that Wall Street stays way too bearish, way too long before they start to flip over to the other side. That's why actually I was a little scared going into this year, because Wall Street was actually so bearish going into this year, and it's kind of like, it's got to be a trick, man. Sure enough, market just dumps like crazy. As of right now, the NASDAQ's down around 22% from the highs. 22%. Thank you, Wall Street, for going bullish going into this year, right? Figures. And so here we are in the situation where you got to understand the sentiment turns slow, but as it starts to turn more and more bullish, the market, guess what happens? It goes higher and higher and higher. And so that's what you see many times here, right? Now, additionally, what I'm showing you in front of you right now is the latest margin debt numbers. So if you don't understand margin, just think of it as essentially taking out debt to invest more money, right? Instead of having $100,000 to invest because it's your own money, you have another extra $100,000. Now, people take out margin, meaning an average Joe sometimes. Horrible decision, by the way. It's going to come back to bite you. But individuals do that sometimes. But then additionally, big money does that, like hedge funds, like some big money folks, because they want to try to make more money. And they say, gosh, man, I made 15% last year. If only I had even more money to invest. Let me take out some margin, right? Oh, if I can make another 15% this year and I have to pay back the debt at 7%, that's 8 percentage points of arbitrage there. That could mean, hundreds of millions of extra dollars or billions of dollars of profits, right? If you're a fund. So when it comes to margin debt here, we're clearly in a downtrend, which is great news, actually. This is something everybody should want to see that's going on out there. Is margin debt going down? It peaked right here, January, $937 billion, then went down to $918 billion, $880 billion, right? I think we're going lower here. I think we're definitely going lower here, okay? I would say, because remember, this was as of the end of March. Remember, April was a pretty panicky week, okay? When you get a panic week in the VIX spiking, remember the VIX spiked to like 50 plus, right? When you get that sort of kind of panic in the market, people are liquidating margin rapidly. And so that's what we have seen. And obviously the market's still extremely jittery, still in a lot of extreme fear out there. So it's not like people are running out there and saying, oh, I got to go margin up right now. And so my opinion is when we see the next margin levels, that still won't come out for several weeks for now, but we're going to likely see a low 8 number here, maybe even a high 7. Because based upon all that panic selling that happened at the beginning of April there, I'm telling you, margin debt's going to be way down, in my opinion. Way down. Like we'll see the lowest levels we've seen in quite some time, to be honest, right? And if you want to understand kind of what levels we're going down to, we're going to go all the way back down to, in my opinion, with these next numbers that come out with margin debt, all the way back to levels that we were at the beginning of 2021. Now keep in mind, the market's way higher today than it was at the beginning of 2021, but it just goes to show you that we're likely going to go back to, lows, or we can call it margin debt levels that happened years ago. We're talking 4 or 5 years ago type levels. That's where we're headed in regards to the situation. And I'm even looking at some stocks that, obviously we spoke about big tech, but I was even looking at somebody like an American Express that came out with very good earnings and a good guidance number here very recently, as in last week, right? Forward P of 15 on this stock for American Express, such a quality company. This is one of the most quality stocks in the entire stock market, American Express. And so it just goes to show you that at this stage in the market, you're getting a lot of opportunities outside of even just the big techs. You're even getting some of these opportunities, right? Now, when you're getting some of these easier money opportunities, you got to understand, right, that the smaller cap stocks, those ones are going to be even more of an insane kind of risk reward arbitrage, right? The big techs, the Metas, the Googles, the Amazons, that's giving you a chance to add some of those companies to your portfolio at extremely joke prices, right? Like you're going to make a lot of money on the stocks. You hold them the next few years, right? But you got to understand that some of those small cap names, I did a full video, what was that, probably 3 or 4 days ago here on the channel. The best ROIs are going to be in some of those small cap names. That doesn't mean position into all those small cap names and go crazy with those, because those still have a lot of risk given the market conditions we're in right now, right? But just the best ROI opportunities will be those. And so that's why I love to build, we got our stake, which is kind of those big tech companies, the ones that I own, like a Meta and Amazon. And like I said, Google looks great right now, even though I don't own it, looks great, right? And then around that, you add some of those small cap names. Then you add some of those quality names, the dividend value type stocks like an American Express. Oh my gosh, you just have, you're really at a buffet. You're at a buffet of opportunity in this market now at this point in time, right? That's the best way I'd put it. Now, keep in mind, what do you do during earnings madness like this? which I think is a very important question. What do? It's like the grizzly bear's after you, okay? Play dead. You play dead, okay? You be calm, don't panic. The grizzly bear's after you, okay? And so what I like to do when we're in an earnings season like this is I like to really just focus on conference calls. You don't see me doing all these massive buys and sells during a market like we're going to be in over this next 13 trading days. I'm going to be busy as heck can be with paying attention to what these companies' numbers are, grading their income statements, listen to conference calls, listen to those conference calls again, right? And so I still buy every single week, and I'll be buying during the next 13 trading days, but you won't see me making like drastic, like, oh, I'm buying $100,000 worth of this stock and I'm moving out $100,000 worth of this stock. No. I do that when we're out of earnings season. So if you look at the moves I was making a couple weeks ago, look at the moves I was making at the beginning of April, the end of March, a lot of big dog moves in there, right? A lot of big buys, and I was covered on the channel. I just bought $70,000 worth of stocks today. I just bought $80,000 worth of stocks today. I just bought $30,000 worth because we weren't in earnings season then. So I saw an opportunity, go ahead and buy those, right? Now we're going into big dog earnings season. Now it's time, the next 13 trading days, let's see all these companies' numbers. Let's hear the guidance, let's hear the conference calls. Then we can assess our situations and say, okay, this is the best opportunity. This is the best opportunity. I need to invest here next. I need to invest here next, right? Now's a time where you watch earnings. And so I'll still be doing my Friday every week buys, but in terms of just flush, like huge, big amounts of money, not likely during earnings season. Very, very low probability, right? I like to load up on the stocks before earnings season, right? And so if there's a great opportunity, you want to buy it before earnings, right? If you see a great opportunity in the market, right? If you're a long-term investor, that is. A trader, that's going to be a totally different story. You're trying to get in and out of stocks and play it from, trying to make $1 in this stock here, $1. No. If you're a long-term investor and you see great opportunity, you buy that stock before earnings. So for instance, AMD, right? I'm more scared of AMD going to $100 plus after earnings, right? Than going to $70 after earnings. If it goes to $70 after earnings, perfectly fine. I'll be more than a happy camper to buy more shares, right? But I'm much more scared of not buying AMD before their earnings come out. Earnings are good, guidance is good, conference call is good. The stock ends up going to $100, $105, $110, and I'm sitting there like, great. Like, why was I not buying more shares? And then I'm in a situation where I'm hoping it goes back down. I'm like, oh, please go back down to $90. Please go back down to $80, right? Other people are scared of going down on stocks. I'm scared of missing the money on the upside, right? I'm playing the game on offense. My defense is always owning value stocks and dividend stocks in my portfolio as well, and never risking the farm on one stock, right? That's my defense. But overall, I'm playing an offensive game here. I'm here to make money. I'm not here to preserve capital. If I was here to preserve capital, the only thing I would do is I'd just keep my money in a savings account all the time, right? And be broke forever. Like, that's what I would be doing. You're not going to make any big money being in a savings account your whole life. I can tell you that much, unless you have some crazy income or something like that, right? You want to get to the big dog money, you got to play offense, right? With that touch of defense in there. But defense is not saying, I can't buy this stock, even though it's a great value, it's a great opportunity, I can't buy it because it might go down. That can always go down, right? Okay, next up here, Tesla, down 50% plus the past 5 months. Where's the bottom at for this stock? And then we'll talk about what if we're in a market that just goes down for the next 6 years, right? Or let's not call it goes down for 6 years. Goes down for the next 2 years, but it takes us 6 years to get back to the highs, right? Like we had after the tech bubble. We'll speak about that, okay? So Tesla, I put my fishing rod in the water today because I wanted to see what people had to say. So I'm not sure if you guys follow me on X, which is always linked in my description area. If you ever want to follow me on X, if that's something you use, I always post a good amount of content on there. But I put the fishing rod out there today and I said, Tesla stock's now down over 50% from 5 months ago. Buy or sell Tesla now. And I want to see, like, what do people have to say about Tesla? Are they bullish still? Have they gone bearish, right? And I'll be honest with you guys, I didn't like what I saw. I did not like it. It's probably a buy here right now, that sort of sentiment. The negative news from yesterday is probably already priced in. Bad earnings usually boost short-term performance. So if the market is down as a whole, Tesla will likely rebound by the end of the week. I've been DCAing pretty much all year. You'd be a fool to sell now. It may go down this week, but looking back, this August would be now regrettable. Buy, and buy some more. Tesla has to be a buy at this price. Big buy more. I bought a few today. Remove the sell button for the next 5 years. Tesla's not a stock, it's an IQ test. Buy this one really scares me. Buy the bottom is $200 worst case, right? That's the stuff that really scares me. Like, oh, $200 worst case for Tesla. Like, can't go lower than that, right? Stuff like this, pull out a second and third mortgage, right? Buy Optimus robot hype will take off this summer, $500 this year, right? So I don't like what I'm seeing in regards to that. There's still, you know, Tesla's such a sentiment-driven stock, right? And what I've found time and time again is you don't get real bottoms on Tesla stock, it seems like, until the sentiment goes horrible. It's not really like about a price level. It's not about a forward P or anything in regards. It's just you got to wash out the sentiment. Until it doesn't feel like you can ever get a bottom on Tesla until everybody's ashamed to say they're even buying the stock. Unless you have the craziest brass you know what. It seems like until you get to that level, like you haven't really reached a bottom on that stock, right? And so if we go back to, you know, my insane cost basis, right, back in 2019, back then, people were not loud and bullish about buying Tesla, right? People would watch my videos back in the day, and I was talking about buying Tesla, and this is a big opportunity I see, and blah, 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 right? But people were quiet. They were real quiet, and people would watch my videos, and some people were buying that stock, and they made life-changing money on it, right? Millions of dollars, hundreds of thousands of dollars, because you didn't need a lot of money in Tesla to have made hundreds of thousands or even millions of dollars, right? It was crazy money-making opportunity back in the day. Nothing like it is today, right? Nothing. But back then, whew. And, you know, there's a reason I call this house the house that Tesla built. It was an incredible opportunity, but a lot of people were quiet. They weren't loud. They weren't saying, buy, buy, buy. They weren't saying, all the bottom's in. They weren't saying, like, you know, all this stuff that a lot of people are saying here. And even if I go back to, you know, the end of 2022, when the Tesla stock was hitting real lows there, it got down to around $100 right at the beginning of 2023, right? The bearishness was insane in regards to Tesla. Like, no one really had much positive to say about Tesla. And you had even a lot of people predicting that Tesla was going to go down to $50 to $60 in 2023. Obviously, it didn't. It went on a ripper rally and then another ripper rally in 2024, right? So it just feels like there's still too much bullishness from the retail community in regards to Tesla. I want to see that, like, sentiment, like, washed out. Like, once everybody gives up on the robot idea and Optimus and all this stuff, then we're talking. Then we're talking, right? And so Tesla's at an interesting point, because if this retail sentiment gets broken over this next few months, you know, this stock could go down to $100. And that's a long way from here. The stock's in the 200s right now. That'd be a 50% plus fall. So we'll see what happens with retail sentiment, but I'm just telling you, and if, let's say, earnings are bad and then people start doubting Optimus more and more, start doubting the robo-taxi opportunity, those sorts of things, woo! If you could break the sentiment, then we could be talking, go back down to that $100 range, which is where it was back in 2022, right? Which would be, you know, then we're talking, right? Then we're in business. But you got to break the sentiment, man. There's still too much bullishness in regards to Tesla, right? And a lot of people try to argue with me about Tesla, and I just say, don't argue with me about Tesla. You know, like, you can argue with me about other stocks if you want, not Tesla. I know this company like the back of my hand, right? Like, I know what they're up to. I know what they're doing. I know what they've done in the past. I've kept track of the company. I made stupid money on this stock. And I know very well the sentiment around Tesla, the community around Tesla. And so, you know, if you ever see me buying Tesla, extremely bullish. Am I buying Tesla today? No. Am I at all interested in buying Tesla today? No. $100? We can talk. You know, under 100, then we can really talk, right? But based upon kind of everything I'm seeing in regards to Tesla, there's just much better opportunities from a risk-reward standpoint out there for the next 5 years. And it's really not even close. And so just do keep that in mind. I hold my shares today as more of a ceremonial position than like, you know, really excited about, like, you know, money that will be made over the next few years. It's a little more of a ceremonial position because it's such a small amount of shares. I own probably, I don't even think what I own right now, I don't even think this is 10% of the shares I owned back in the day. You know, prior to obviously the insane boom and then all the money to be made and whatnot, right? So just keep that in mind in regards to Tesla. You know, people can argue with me if they want, but you're just arguing with the wall. You're not going to argue with me. Like, you know, if you think you outnknow me more than Tesla, like, go ahead, help yourself. You know, there's certain stocks that I feel like people, there's like that top 1% that know more than me about that stock, and I would say like AMD, Nvidia, stocks like that, I feel like there's like a 1% out there that knows more than me. Than Tesla, no. That's not one of those stocks you want to argue with me about, trust me. Next up here, third subject, 6 years to get back to the highs. So this is an interesting subject that was discussed today. Mr. Shorthill's Capital was on there, and he's talking about 6 years it took you to get back to all-time highs after the tech bubble, right? And that made me think, like, let's discuss that today, because it can be a big fear for people. Like, I think that's a much bigger fear than like the stock market crashing another 20%, right? Like the S&P, if it goes down another 20%, I think people are like concerned with that. But I think the bigger fear is like to hear like, what if it takes us until 2030, 2031, 2032, something like that, to get back to the all-time highs we hit, let's say at the end of 2024, beginning of this year, right? That's pretty dramatic, right? So first off, he's right on in regards to that. It was 6 years. If you look at the market, it peaked, it peaked kind of like several times, throughout 2000, right? And then it took you all the way, out into 2006, if not into 2007, to get back to those old prices that the stock market used to be in regards to S&P 500. That's what we're looking at here. Additionally, you had 2 years of market just going down, right? Every time it would bounce, it would just end up lower and lower and lower. And that happened for 2 years straight. 2 years straight. Imagine every rally ends up getting sold in the end for 2 years straight, right? And obviously, it was a pretty dramatic crash. I mean, you were looking at, S&P 500, 1,400 plus here. And you're looking at S&P 500 at the lows, in the 800 range. It's a big fall, right? And so that's very scary to people. Very scary. Like, oh my gosh, that's so scary. Well, I'll give you a few other ways to kind of look at this, right? One, we came off of the tech bubble, a time period where a lot of companies were, priced ridiculously, crazy P ratios all over the market, silly valuations, and a lot of companies that obviously went bust after that situation because they were completely unprofitable trash, right? Can you compare what's going on in the last year to the tech bubble? No. The top of the market is insanely strong. The strongest companies we've ever seen in the history of mankind by a mile. We've never seen a company as strong as Apple is, and Microsoft, and Google, and Meta, and Amazon, and all these companies, right? So do keep that in mind. Next up here, we had 9/11 to deal with, right? In September 2001. Very dramatic. We also dealt with multiple wars, right? Afghanistan and Iraq. And so there was, and that's just, tip of the iceberg in regards to that situation. That's just some of the, it was a lot of big events that, just keep in mind, were extremely dramatic. I mean, extremely dramatic, right? So understand why it took us multiple years to bottom out that market, right? Now, here's another way to look at this. The S&P 500 as of today is over 5,000, right? 5,000. And that's even after this big fall here recently where the S&P 500 has lost, a good chunk of it, right? Imagine you were buying throughout that crash as the market went down and as the market came back up, right? And so you were buying in the 1200s, you were buying in the 1100s, you were buying at 1,000 something, you were buying in the 900s, the 800s, right? Imagine that. And you were just loading up on stocks for 5 years at those prices. 5 years. Dollar cost average is buying every single week, every single month, however often you could buy, right? You got more income than expenses, you're buying. And today the S&P 500 is over 5,000. Like, could you imagine how much money you made? Could you imagine you were buying, companies that had great long-term futures like nvidia at that time, and Apple and Amazon, right? And you're like, oh man, this company's got this, You're looking at Apple, you're like, oh man, this iPod's just going to keep getting bigger. Steve Jobs, great CEOs back at the company running the show again, man. They got the new computers out. They're going to keep expanding on this mobile revolution. Like, this is going to be, incredible. Look at this Amazon company, right? Jeff Bezos is running the show there. What a job he's done. He got the company through the tech bubble. More and more people are going to be ordering stuff. He's building out this company for the long term. He's not focused on the short term. Imagine, you were just buying those stocks. Like, you didn't make millions of dollars. You made tens of millions of dollars. You didn't make tens of millions of dollars. You made hundreds of millions of dollars, right? You were buying, loading up on Amazon back in those years, and nvidia and Apple and those sorts of companies that were incredible opportunities, right? And even if you were just buying the S&P 500, you still did phenomenal for yourself in the end, right? And so it seemed like, oh, this is so bad to be going through this right now. But all it was 5 years of just an incredible buying opportunity. And the thing you want to understand about that particular time period, and why you should never fear even a multi-year down cycle for the market, is you have time on your side in regards to that. You have plenty of time to be buying at insanely attractive prices. You think you don't understand about 08, 09. People think that was the ultimate buying opportunity. No, it was not. And the reason was, when you zoom out and you look at the great financial crisis, insane crash that everybody talks about, that was not an ideal buying opportunity because it was a straight V. It was a V crash into a V recovery. You didn't have time. So unless you just had all this money around, you just flushed it all in right at the bottom or something like that, you didn't have time. Whereas if you look at this crash, this is way better to be a buyer actually in this crash because you had time on your side. You had several years of just loading up on stocks at extremely attractive pricing. Whereas during the 08, 09 crash, it was here day to day, gone tomorrow. It was straight down, straight up. There was no time to I'm going to build these positions out for a while. No. It was like, look at how short the time period was versus this one, right? This is actually a way better buying opportunity. And so just to understand, if you had to pick from one of these, this is a way better if you're focused on the long term, right? If you focus on how much money is your portfolio, say tomorrow, then I don't know, maybe you want an 08, 09. But if you're focused on what your portfolio says 10 years from now or 20 years from now, this doesn't scare me. I look at this and I say, phenomenal. Like if you tell me I could buy for several years stocks without the market hitting a new all-time high, steal deal. Are you kidding me? That's like the dream come true as a long-term investor. This was quick, man. That was really, really quick. And so that's you got to understand about this. Don't fear an 08, 09 flash crash, right, where the market does a V-shaped recovery. And also don't fear a multi-year, we don't hit a new highs in the market, because that's just an insane buying opportunity for several years, right? So what do I always tell you guys, right? Income over expenses. The most important thing to be a long-term investor. You got more income than expenses. You're ready to buy every week, every other week, once a month, whatever. But you're always in a buying position. And so you should hope what we're going through right now is, we're what, 4 or 5 months into this whole drama in the market, right? You should hope this is just 4 or 5 months into a 2-year down cycle for the market. You should hope that. Because that's going to mean you're going to get an incredible buying opportunity, because then even when the market bottoms and starts coming back, right, which, by the way, was a good chance we already hit the bottom in regards to the market, but I'm just running you through the scenario of it goes down for 2 years and every major rally just gets sold back down, right? There you go. You got 4 or 6 years of buying at great pricing that you'll look back 10, 20 years later and be like, oh my gosh, can you imagine? Remember I was buying back during blah, blah, blah year? What a buying opportunity that was, right? And then coming out of that, you'll make tens of thousands of dollars. You'll make hundreds of thousands of dollars. And the ones that get it right as far as picking the best companies for the next 10, 20 years, those people end up making millions and tens of millions of dollars. No different than if you were back in, after the tech bubble blew up and you saw opportunities like Apple and opportunities like Amazon and opportunities like nvidia, right? And those sorts of companies, and you're like, boom, boom, boom. You made tens of millions. You made hundreds of millions. You didn't even need crazy money to put into those because you made so much as those companies became beasts, right? And so do keep that in mind, right? That is important. And as the famous saying goes in the stock market, when in doubt, zoom out. When in doubt, zoom out, folks, okay? Hope you really enjoyed today's video. Hope you got a ton of value out of this one. I try to make the most valuable videos I possibly can for you guys each and every day. Additionally, if you want my stock picking checklist for free, pin comment down there, click on that, put in your name, and we can send it over via email or text. However you want the checklist to come, we can do that, okay? All right, guys, much love and have a great day.